I think construction is in for big changes, positive and negative, starting right now. We're starting to see a big pickup in apartment construction, improvement in hospital construction, and some other private sector construction segments are finally awakening from their very long slumber. Meanwhile, public construction, such as the stimulus program, the base realignment projects, and the Gulf Coast restoration and hurricane prevention work is running at a maximum, and that may fall off very sharply later this year. So I think this is a time that contractors really need to connect to find out what the opportunities are and also what the risks are. Beyond the construction activity, there's also big changes happening with construction materials costs, and it's really important to find out what those trends are and how long they're going to last.
It's an improving outlook. The economy has been recovering now for more than 1.5 years, and construction eventually becomes part of that momentum. And I think the leading indicators are pointing in the right direction, whether you're looking at how busy architects are becoming or whether you're looking at ABC's own construction backlog indicator. Everything seems to be suggesting that construction performance should improve during the latter part of 2011 and into 2012. That said, with materials prices now rising vigorously, with interest rates trending somewhat higher, at least in recent months, it means that this is not a particularly stable outlook. In other words, the baseline outlook is for improvement in 2011. However, there's a lot of uncertainty around this outlook, and so it would not surprise me if some of that improvement that is currently anticipated actually does not come to pass.
But what we're saying is that the economy is going to recover. It is gaining momentum. But there's a lag between what the economy does and then what that translates into for construction. There are significant obstacles that have to be overcome. In residential, there's a foreclosure issue. In non-residential, there's high vacancy rates, low expected return on investments. And on the public sector, there's still huge state deficits, which impacts the public consumption. So even as the economy starts to grow, it'll take a lag before we actually start to see those benefits materialize.